Micron Technology delivered a monster fiscal Q2. Revenue nearly tripled year-on-year to $23.86 billion and adjusted EPS hit $12.20, blowing past estimates of roughly $19.7 billion and $9.19. Yet the stock slid more than 5% in after-hours trading and pre-market on March 19th. The culprit wasn't the print. It was the price tag on what comes next. A big jump in capital spending that left traders uneasy even as management guided to another record quarter, roughly $33.5 billion revenue and $19.15 EPS, with gross margins 81%. Why the fade? First, expectations were sky-high. Micron shares have surged, up 283% since July 1st, 61% year-to-date before the print, as the memory cycle flipped into shortage mode on AI demand, making the company one of only 3 major suppliers of high-bandwidth memory, HBM, alongside SK, Hynix, and Samsung. After that kind of run, a beat and raise can still feel like a sell-the-news event, especially when the bar is moving faster than guidance. As one note put it, the buy-side's expectations may have been even more elevated than the sell-side's. Second, Capex. Micron said fiscal 2026 spending will top $25 billion, about $5 billion higher than prior indications, and that 2027 spending is headed higher too as construction costs rise. The extra outlays are aimed at expanding HBM capacity, including HBM4 for NVIDIA's Vera Rubin platform, ramping the 1 gamma drum node, and pulling in equipment orders and fab timelines. Idaho wafer output moved to mid-2027. Analysts acknowledge the logic: tight supply, strong pricing, and a memory supercycle, but markets often punish big Capex lifts, especially after a huge rally. Third, margin math. Gross margin hit a record 74.9% in Q2 and is guided to 81% in Q3, but with prices and mix already stretched, the pace of expansion slows from here. DRAM prices jumped 65% quarter-on-quarter and NAND 70%. At these levels, each incremental price gain adds less to margin percentage, and any hint of peaking pricing power can spook momentum buyers. Fourth, cycle nerves. Memory is famously cyclical. Micron itself flagged that PC and smartphone shipments could fall by a low double-digit percentage in calendar 2026 if AI demand wobbles or new capacity arrives faster than expected. Pricing could soften quickly even if the AI-driven tightness persists into 2026. The company says its 2026 HBM supply is sold out, pricing and volumes locked, and it sees the HBM TAM compounding to $100 by 2028, 40% CAGR. But the market is already pricing in a lot of that good news.